Good evening to you all. First of all, good evening from Turkey, Izmir. It's 8:30 p.m. in Turkey, Izmir. But I know for people watching from somewhere else in the world, it goes from eastern side of the world to the western side of the world. There's a big time difference, so we can control our investments, how much money we can make from our investments. We can even control time of death. You can say, how can you control your time of death? That's your destiny. Well, if you are Japanese and if you move to United States just for a travel, and if you die there, you will live one day longer. So if you can extend your visit maybe further than United States, maybe you can extend it to a week, a month, a year, maybe, right? Now that brings us to Einstein's theory of time and time and distance and speed of light. So basically, we control our destiny to an extent, not completely. Okay, now as per investment purposes, um, we had a week of last week, very let's say shaky week, which I mentioned in the beginning of the week in my Turkish channel. Now I'm making this English channel before we move into the second stage of this very shaky market, and the expectations were based on what the Fed will do. Will the Fed delay the that's all the expectation so far. Will the Fed delay the interest reduction, or will the Fed keep up the rate longer at this higher level? So that's all. And we are talking about 25 basis points. And if it's 3 times, 4 times, 6 times, for us who live in Turkey with 65% announced inflation by government, 1.5% per annum is like, is that a fly? Okay, so that's nothing. So, but it becomes very important for worldwide. It's going to be 1.8.4, 4.3, 4.5, or 3.9. Even in, you can say that's in TL. Let's talk US dollars. Fine. We are paying 9% US dollar interest for our euro bonds, which are denominated in US dollars and pays every 6 months. So when we are paying 9%, 6-7% is like, our government bonds, 4% is peanuts, so we are paying 3 times what they offer. So okay, but you have a risk of not paying. Well, so far they succeeded in paying all the loans on time so far. I cannot guarantee the future. That's why you have to buy CDS insurance, but then it's not worth buying it because a majority of the money goes to CDS, so you lose about 3.5% of the 9%. That leaves you close to the American amount, like 5. Theirs is 4, so you get at least 5.5 from Turkish government, let's say foreign money, US dollar denominated loans. Those are called euro bonds, and they're open to all foreign buyers. So now the next week in the US, there will be two very important occasions. One is, as we are today on the 6th of the week, which is Saturday, and tomorrow is Sunday. On the 8th to 10th of next week, there is an expectation by the Security and Exchange Commission to allow ETFs for blockchain or crypto money, let's say, and that's increasing the mutual funds, which are unofficially denominated ETFs. They invest in the companies that invest in crypto coins, like micro. Was it micro something, whatever, and they grayscale ETF. So they invest in what's forbidden, micro strategy. I just remembered. They invest in them, the company, nothing else but just blockchain, and BTC, basically Bitcoin. So these things there is a two-way going on this. I believe initially this can create life for anything. If it was not Bitcoin, if it was gold to be left and let's say for free market availability, initially it will increase the price for organization investing, at least getting some, trying to get some, so that they can hedge their ETFs based on those crypto coins. So it will initially cause an increase. Maybe it can go up to, I don't like giving numbers, but quickly it can hit $48,000. This is technical, and 48,000 is peanuts, from 45. You can expect all the way to up to $50,000, $60,000. Then when it's saturated, it can go back to 10,000, 20,000. So this is not something to rely on for very long term. This is just an opportunity. So you have to just take the opportunity and run when you think, and most people will do that. In other case, if they reject the offer and you had to buy it in front already before the day comes, then you may lose some money. You may wait a couple of weeks, a month, because they'll probably never say no. They'll probably say later. Okay, so that means you shouldn't be so much afraid of investing them if you're ready to wait a little bit more, like another 3 months, 4 months. They will come up with something. There is money to be made for the portfolio companies from it, and that's something they want to get use of it, no matter what. So this is the important expectation for the next week. First of all, I don't want to elaborate on crypto coins, this and that, because I have different views. Because I believe I read history. All wars on earth are made basically to dominate the cash and money and taxes system. That's what even the Ottoman Empire conquered many countries. They didn't touch for 600 years the people there. They said, you can remain Christian, you can talk your language, you can run it the same way, just pay me so many golds of Venice gold, so taxes, and I will protect you when you pay the taxes. Okay, it's like a nightclub being protected by a bodyguard. So basically this was natural for all the world. That's what they were doing. They were conquering and then protecting them against the taxes there. Now, assuming there is a non-centralized money which they will allow and say, go ahead and tax my people, get the money, get use of it, don't even pay me a penny, and that's a nonsense. They will not. They will, if they capture you in the future, if that comes to that point, they will even hang you, and they will, if hanging is forbidden, they will put you to life sentence if you're caught you are not using their own currencies. Okay, so that's why the world is fighting today. Chinese want to become the world money, reserve money, and US dollar wants to protect its reserve money. That's why the show of force, show of muscle, all these ships going there, and just to see that I am strong. And if everything else fails, if my economy fails, I'll use my military force. Okay, so that's what you need: gold, military force as well. To be a world, let's say, reserve currency. So while there's so much war going, you come up with a name, and then chetato, and then collect people's money. And next day, I will have people from government officials coming to see me very quickly behind the bars. So how do they allow this? Right now, they get use of it. Okay, so they keep silent. Let the money come in. Okay, so don't. But once it becomes a danger for their economies, they will prohibit it. They prohibited gold. That's, if you read Robert Kiyosaki's book, when he was fighting in Vietnam, American government and president declared gold to be returned to the government, and nobody can buy and sell gold. So they did it to gold. It's nothing that comes out of a fiction book. This is what happened in actually. If it comes to endanger their paper money, where they make a lot of free money from just printing against nothing. So that's why most people are trying to say, how can we avoid inflation in the world? How can we protect the money? Who wants it? Nobody wants it. They want it to be, printed a lot, and instead of paying the loan, just let's say melt down the loans, by reducing the value of your money, no matter what money it is, paper money. So that's why gold is a very big, let's say, enemy of governments. They keep it in their vaults, they keep it under their central banks, but it's their enemy. It's not their friend. Okay, they hate it because that's the only thing, that's the only real money that can protect you against real inflation of the money printing. Okay, so not to change the subject, another thing, what else are we expecting next week? Next week we're expecting CPI data to come out on the 11th of which is we are now on the 6th of the day. So they'll be back to back announcement. CPI is important, consumer price indices. Next day, it will be producer price indices. PPI will be announced in the USA. These are important just for the sake of Fed's either going to increase this 25 basis points or not in March or June. That's all the discussion is about. So last week, some figures came, which are again based on the same situation. Are workers out, let's say, agricultural demand excluded workers increased or decreased? So they were, instead of decreasing, which the Fed is Fed friendly, people losing jobs is Fed friendly. 46,000 more people got jobs. But there is a fake number. This is where I come to put the heading white lies, green profits, okay? Because these numbers are fake numbers. And I'm not saying that it's fake because I think they are. They were announced previous months, are always readjusted downwards, always downwards, never upwards. And so far, if you just reduce the previous months, downward corrections, okay, or downward correction, that's a minus 71,000 people. They reported more. So now they took it back, and they are now reporting there is 46,000 higher, which they will revise next month also. So in actuality, U.S. jobs are lost, okay, but they just wanted to continue this because they are not sure that inflation is being really because that's not the way to beat inflation. Inflation is delayed enough, so that's what they are checking on. But then if you delay it too much, you run into recession problem. So they are also scared that too much anti-inflationary action may result in a delayed, lagged recession. Then we are talking about, is it going to be a hard landing or soft landing? Okay, so if they do it in March, the stock exchange in US will tumble. Why will it tumble? Isn't it better news if the interest rates fall for the companies, for people to spend more? Normally it is, but it's not normal, because what happens is when the rates are cut down as early as March, the people and the let's say investors will decide, oh, we are in big trouble. They cannot even wait till June. We are heading towards bad recession. So in the past, anytime after these monetary interest hikes, when they are reduced, following the reduction, the stock exchange tumbled more than 20, 30, 40% each time. So we are expecting good news. Good news is always bad news, okay, for the market. Market prices the future. So that's why you get confused when I said this is good news. Why did it fail? I was expecting it to be better. That's how it works. They price the future, not the today. Same was happening in gold. As you know, a few years ago, we had this disease which is reviving, looks like today. All the hospitals are full of sick people. and there are more deaths happen today in a Western country because of COVID again. And so, in a way, during that time, the gold prices increased incredibly in front before even it came to the Europe or USA, because that's what gold does. Buy it previously. What did it buy previously? By going up from $1,600 to $2,000 an ounce, it assumed that because there will be closing, there will be no payments, no economic activity, and governments will print money. So I better buy it on the front, okay? So most people said when they find a vaccine for this, it will all be resolved and gold will fall. And it didn't, because there is always a second one coming, okay? So it's buying the second one in line. So either a war or disease, and not the disease or the war itself increases the value of the gold. Gold increases because it knows their only solution is printing more and more money, which causes inflation, so that gold buys you the protection from what's going to happen in the future. When it's resolved, gold does not like it, okay, because it's already bought it in advance, okay? So basically, that's how gold behaves. Now, this week, in terms of if you're looking just for gold or stock exchanges, they will start acting separately. Until today, they were acting together. Gold was going up, stock markets were going up, because their common enemy was the interest rates of the Fed and general applied interest rate, because that was a readily guaranteed return. But right now, when this is changed, and when the things diverge to two, which is recession or recession. So this is, gold loves recession. Companies hate recession, because during recession they have to kick out people, they have to close down plants, they have to stop hiring people, stop projects, everything slows down. For gold, why does it go up? When people are getting poorer, losing jobs, the companies are closing, why does gold go up? Like the COVID situation, the gold goes up because it says, to come out of this problem, they have only one solution: print more money. So it's going to be more inflation in the future. That's why it goes. The companies, while companies are falling, the gold is going upwards. So do I expect a number? I just calculate the US inflation. In the past 4 years, we are now in 2024, since 2019, US dollar lost about close to 20% of its value. 1/5 is gone, evaporated, okay? It's 19.90 something, but who wants that much an accurate number on something that is not a technical measurement? It's a mixture of bag. It's a mixed bag of golf balls and electricity and car prices. So not everyone knows that it's a big lie number. Even if you want to be correct, you can't be an inflation number, because everybody's inflation is different. If your child is going to private school, it's an important cost for you. If your child is not going to private school, just going to public school, who cares how much the prices increase there? But both your inflation is calculated as one single number. So even if they wanted to make it a correct number, willingly, it will never work for everyone. Basically, what they will do, they will start printing money. And because they printed so much money, they evaporated 20% of the US dollar purchasing value. Today's $2,000 gold ounce price, 2,050, 60, it doesn't matter. You have to multiply by 1.80 to reduce the 20%, just in the recent 4 years I'm talking about. So it's 2,000, and the 2,000 times 0.80, 20% is gone. It's easy calculation, 1,600 US dollars. So in reality, currently, gold is slightly above $1,600 in purchasing value of real US dollars. So if it goes up to another $2,000, there's another $400 waiting for you. So it can go up from 2050 to 2,400, 2,450 easily. And if they keep printing more in the future, which they will, that's how an ounce of gold was 45 US dollars in 1970. Today is 2,000. So it's more than 50 times, 50 times increased in value, or US dollar decreased in value. Gold didn't increase. Gold is just sitting there. US dollar lost its value by 50 times. Okay. So if something lost value 50 times, and if it's still printing, if it's borrowing like crazy, over $34 trillion limit is passed last week. So it's obvious that it's going to be 55 times, 60 times, 65 times, 75. So why not go up to 75 times? So basically, for each turn, you must calculate $45. So if it increases 90 US dollars, because we are comparing with the $45 in 1970, that's another just adding 2 times. Okay, every $45, or let's say $50, every $50 an ounce of gold goes up is another doubling, okay, of the gold price of 1970. Do not double it with today's prices. Then it's going to be suddenly from 2,000 to 4,000, okay? But they don't act momentarily. Just as I said, it can buy it in forward, and then it can catch up later. So you have to be patient. You have to be patiently collecting gold. If you are a gold investor, you should just keep adding, ounces, grams. That's how you make money. You don't want it to go up quickly. You don't want it to be $4,000 if you're just collecting it. If you have a big, pile, fine. Then you have to think, okay, now my gold is worth 2 times more. What am I going to buy with it? Surely not another investment. You cannot buy gold with gold, because gold is expensive then. Now you must have a good dream to buy, like a car, a house, a boat, something, a land. You have to swap it with something. Otherwise, if the gold value goes to double, if you don't have a dream, it's nothing. It's also a melted dream. So you must have a target of what to do. Basically, these are the coming this week's. Tomorrow is Sunday. Next 5 days following Sunday will be a big shaky market. Shaky markets are good. I asked the Google Bard, which is the artificial intelligence of Bard, natural dumbness and artificial intelligence. Okay, they are fighting, and I asked, is it good for inflation is good for investors or bad for investors? And it replied, it depends, on which side you are. If you are borrowing a lot of money, and if you borrowed it cheaply, like 2-3%, the American home buyers did, and inflation went up to 9%, you made big bucks, but you are not aware of it. But your loan is melting without paying, okay? So the higher you get a loan, the higher the inflation rate, you make big money, especially if it's a leveraged loan, like a house loan, where you put 20% of the money and banks put to 80% of the money. You make huge gains in this type of situations, not by investing in US dollars, by investing in physical items. Especially, they don't let you buy gold with the same leverage of 20 to 80% of your money. They just let you buy houses. So you have to, the choice is not arbitrary. You have to choose. That's why I always ask, why are you giving people home loans 1 to 4 and not giving them to buy at stock exchange? Well, homes we can put a lien on. Okay, I'll give you my stocks. You can keep them for me. Okay, as a collateral, no problem. Just give me the 10-year loan, 30-year loan. Just like the house, let me buy gold. Just banks, tell your banks to pay me 4 times more money of my cash payment, down payment. I'll buy the gold, okay, 5 times, so that instead of having 100 ounces of gold, I would have 500 ounces of gold, okay. Fine, you can keep it in your treasuries, okay, but can I trust you really? You know, I have to think about it. I don't really trust, that that gold will never be there. It will be in paper. It will be in paper. Okay. I hope you all a nice weekend, and I will probably and definitely make another video once these numbers come out and they get revised as usual, because another fake thing against behind these numbers of the 46,000 gains of the last week, the biggest lie behind it is 25% or 1/4 of this increase in this month of December was coming from part-time jobs, and they were not full-time jobs. So people lost their full-time jobs. They went to, like flipping burgers and, pizza stores, waiters, this and that. So they have one person counts as three. So you can be in the morning flipping hamburgers. At nighttime, you can be a waiter at a restaurant. Do you know that people distributing couriers, we call in Turkey, with motorcycle, distributing food, they are now, New York government, federal government passed a law that their hourly wages cannot be under $13, something around that, so that you order a $10 menu, and on top of it, they add $8-9 of, delivery cost. So deli means delicious in the US. Deli means in Turkish crazy, nuts, So delivery is becoming deli business, okay? Crazy business. Stay away. Some people won't care. They'll just pay the difference. But, it's like paying double for the same burger menu. So that's the situation. And another thing, the 1/4 of the jobs that were created last month are government jobs, which are not actual jobs. Okay, that's for we have elections in November, so we have to give people good jobs where they don't really flip burgers and carry things and take dangerous actions. They can just sit at the desks and and take a nap and get that kind of a white collarish jobs. Okay, so they are government jobs. They are not 1/4 of this increase is not real jobs which produce taxes, okay, or productivity. So it's just jobs. So that they were given in 1920 also. People were asked to dig a hole and then refill it, and they were paid for it, just to give them some job to do, instead of just sitting and drawing the money. They said we must at least force them to do something. So just dig the ground, and nighttime refill the ground, and here is your paycheck. Well, those are macro things we cannot change, but micro things where we invest, we can change. That's in our hands. So, but to invest, first you must have some money to invest. Doesn't matter, even very small amounts are investable today. So you must know that instead of starting up your own business, you must be crazy. Why don't you become partner with the 7 magnificent companies of the world, and maybe the following 2,000 other companies following them, and just draw the benefits by just laying it back. So if you're a person that has money, and if you don't have big technical or software intelligence or things like that, just don't bother doing business. I tell you, it's not the age of working. It's age of just laying down and drawing the profits from the let's say dividends, whatever, all kind of profits. So you didn't create it. You are just getting use of it. And anybody ask me, what is the best thing that I should learn for myself? Learn finance. What business shall I be doing? Finance. Because even if you create computer programs, software, everything, in the end, you will need to finance it, and you'll go to the banks, okay, to finance you. So if you know how to use finance, then you can go do any business. But just doing business, not knowing finance, you never have a chance to get successful. You must have a very good finance person working for you. Okay, I wish you all a happy weekend and see you next week.